Welcome, everyone. It's Tuesday. Happy Tuesday. Tuesday is one of my favorite days. It's one of my 7 favorite days of the week. I'm glad to see you here. We have a lot to get to today. I want to just update you on a couple of things. First of all, if this is your first time here, if you're watching the recording, we love the crap out of you, and we're very glad to see you. We're basically, this is why we come here. We come here for you, and we're glad to see you. Number 2, you can watch the recording of this and every single daily webinar that I do on YouTube. And I would love it if you would jump over, like right now, if you're not already doing it, jump over to YouTube, click on that link I just put in the webinar, go to youtube.com/RobBooker and smash the subscribe button. That would make my heart sing. Oh, somebody just did it. I could feel it in my heart. Thank you so much for subscribing. That helps us get the show out or the webinar out to more people, and then we help more people, and then more people are successful in their trading, and then more people make money, and then more people can spend time with their families, or something along those lines. Okay, welcome, everyone. Very, very nice to see you. Today we're going to do some back testing, but first I wanted to share with you that my friend Andrew Palladino, who is the developer of some just ridiculously awesome indicators, just shorted the New Zealand dollar, Japanese yen, and I love this trade. I love that it is divergent on the 4-hour chart. That's Knoxville divergence up there at the top. I love that it's getting into massive squeeze territory where basically volatility is low. Low volatility leads to high volatility and a turnaround. And just a regular old RSI is about to break down out of overbought. And RSI is probably going to break that trend line lower. And I think we could easily hit a 30 pip target. And there are even weekly pivots on this pair. But that's not why we're here today. Today, we're going to backtest together, and we're going to backtest a crazy currency pair, the mother of all volatile currency pairs, the British pound, New Zealand dollar. I'm not even sure that's really true about being the mother of all volatile currency pairs. It just sounded like the thing that I wanted to say. How are you this morning, Wes?
I am fantastic.
Okay, now let me ask you a question. Do you have some data ready on the pound New Zealand?
Yes, I do.
Okay, that's great. We're going to test a trend robot. Now, what I mean by that is we're going to try to make a jillion dollars here today. I want to show you a trend trading robot. Now, I don't want to just show you the examples that win. I want to also show you examples that lose. For this example today, and for those of you watching together along with us, I like to counter trend trade, but I know that it's important to have a trend trade in my back pocket because the market does trend a 20% of the time, not a great length of time, but it does trend. The trick with trend trading is to get in early and then ride it for as long as you can and then get out and then wait. That's the trick with trend trading. The other big trick with trend trading is to not ride a loss for a long time. So here are just a couple of rules of trend trading. One, don't ride a loss because the market, if it's not trending, you don't want to sit around and wait for it to because it doesn't trend most of the time. Number 2, ride those ponies. Ride those winners. Ride the pony into town. So you want to, if you get a win, you want to ride that thing. And those are the 2 major issues with trend trading. The problem is that it's really difficult to find a trend, despite the fact that many people say it's easy. The problem is you got to program it. And when you start programming stuff, you realize that the market doesn't really cooperate with trend trading that often. And what you can have are long periods of time where you take a loss, take a loss, take a loss, many times in a row, and then you finally catch a big win, and that can be frustrating. So in today's lesson/webinar, we're going to backtest a robot that we built that we lovingly refer to as the T6 robot. It's a trend robot, and it doesn't ride a losing trade, and it tries to add to a winning trade in order to profit to the max when it does catch a trade. Now, there are a lot of different ways to basically think about running a robot. The way that we think about running a trend robot is as an assistant. Now, we do have robots that we can program to trade 24 hours a day without any human interaction. But in this case, in this example today, we want to use the robot as an assistant. And what I mean by that is we want to decide when we want to turn it on, and it has to be objective and rule-based. And then we want to turn it on and run a test. Everything that we're going to do today can be fully programmed 100%. But as we test it, when we're in the early stages, we choose the places that we want to run it to see if our hypotheses are true. All right. Welcome. A lot of you say that you can't hear. Usually that's because your internet connection blows. All right. It's so nice to see everybody here. Welcome if you're just joining us now. Wes, I'd like to share with everyone how we're going to decide to turn on the robot, and then we'll run a test. So I would like, Wes, for you to get ready to backtest around April 18th of 2017, and I'll share with everyone what we're doing. This red line running up and down through my chart refers to the Palladino RSI 5. That is an indicator that shows when 5 time frames are overbought simultaneously with the RSI. This red line means that the 1 minute, the 5 minute, the 15 minute, the 60 minute, and the 4 hour are all overbought at the same time. This is a 60-minute chart. Now, it's not true that in every instance this is a warning sign that the trend is going to reverse and go a long way. In fact, sometimes, as you see on the screen right now, this is an indication that the trend is this upward movement is going to continue. And that blows for us, because I'm about to say we're going to take sell trades here. And I'm going to do that for a very important reason, because when it does time the market, it goes a long way. So what we want to do, Wes, is we want to switch over to your screen, and on April 18th, 2017, we want to turn on sell trades on the T6 robot. So let's go to Expert Properties and take a look at how this works. For those of you that have never backtested a robot before, we're going to quickly run through some of the items on this list. The magic number is a number that you place into your robot to distinguish the robot trades from your personal trades. Candles back references 30, which means the Knoxville divergence indicator, which is the basis for taking trades, will only look back 30 candles. Slippage refers to we don't want to take a trade if the market is moving too fast and we can't get in at our preferred price. Lots is 1. We're just going to start with 1 mini lot. We're only going to take sell trades, and we want to try to get 125 pips of profit out of the trade. Now, with the pound New Zealand, because it's so volatile, Wes, why don't we try to go for 200 pips of profit? And why don't we try to use I don't know, what do you think, 100 pip stop?
I think that sounds pretty cool.
Okay, so negative 100.
We'll get a little more crazy later.
Yeah. Now, max stop outs. Remember when I said that we want to we want to cut our losers off fast enough that we can make money? If we take 2 losses in a row, then what we've done is we've just eaten up whatever potential gain that we would have, and we want to stop trading. We're not going to worry about any of the other settings on this robot because we don't have time to do it in our short webinar in the morning. We want to run this test and maybe one other. We want to see if we can use an objective rule to turn on a trend trading robot and make it work.
All right.
Scott Renninger says, we can't all afford Rob's high-speed internet. My internet actually in my office is pretty lousy. It's pretty bad. It's not really that good, so I can't even have great internet.
All right. This one's gonna book it. It's gonna be moving kind of quickly. Oh.
Did we stop out 2 times?
Yep, stopped out twice. Yeah, we took sell trades.
And so that pretty much blows, doesn't it?
Yeah.
Yeah. So this is purposeful, everyone. I just wanted to let you know. I did this on purpose to show that, first of all, not everything that we build turns to gold or is magnificent. It doesn't. Not everything that we do is somehow spectacular or wonderful or marvelous or whatever else. What I want to do is I want to show you something that I think is pretty interesting. Wes, do you mind sending back the screen to me?
I don't mind that at all.
So here are some things that we're looking at to improve the fact that this sometimes works and it sometimes shows us a big reversal, but then again, sometimes it does not. Number one, we can wait for Knoxville divergence. Knoxville divergence is an early warning sign that price is going to reverse. And this, by waiting for this, is a better filter for turning on the robot. So what I'd like to ask you now to do, Wes, is switch this to April 19th, when Knoxville divergence completes and shows that perhaps these two things in combination with each other are a better early warning sign that price is going to reverse. Not only do we have this in our favor, but when we come back after this back test, I'll show you even one more thing that we're working on adding to the robot. So we can go back to your screen, Wes, and start it 1 day later.
All right. All right, can you see my screen?
Yes.
Sweet. Okay, April 19th. Shrink this a little bit.
Okay, let's check that out. Let's go back and look at this. Now, we did a lot better this time, but we still didn't take profit, and we want to look at why. So we take a sell trade on April 19th at about 2 o'clock in the morning, and the market tops out later that morning, about 6 hours later. The market just fully tops out, and that's pretty awesome. It took a sell trade because on April 19th at 2 o'clock in the morning, or whatever it was, although you cannot see it on the screen, there was a Knoxville divergence, a bearish one, on the 1-minute chart, which has since disappeared simply for the sake of not showing so many things on the chart at the same time. You can disregard the green and red arrows on the screen as they are not used at this time for the trade. But Wes, as you can see, and we both agree, it may be a really great way to enter these trades instead of Knoxville divergence, because we would have added more trades. We took one trade and it did fall from 82.71 all the way down to 81.35. It made about 40 pips. It got part of the way down, but it didn't get far enough down to take profit. We had that 200 pip profit target, so it did stop out. Now, if you want to send it back to me, I'm going to wrap this up, and we'll continue this conversation tomorrow in our webinar. But I want to wrap this up, and I want to give you some ideas on what we do. Our entire goal when building a robot is to do the following. We build a premise. We start with a hypothesis. This sounds like the scientific method from when you were in school, and it is. Hypothesis. We begin with a premise or a hypothesis about the way something might work. And then we do an initial test. And we usually do this test visually. We don't build a robot to do the test. We do a visual test. And we say, hey, wait a minute. Does this even work visually if I walk through this on a chart? And if it works visually, we'll build a basic robot. And we'll build that basic robot to test that basic hypothesis over a larger number of situations or opportunities or setups. If that basic robot works, we can guarantee that it won't make money. The first run won't make money, and it will need a second hypothesis, or what you would ordinarily call a filter. And that filter would be something like this Knoxville divergence plus something else, and it will help us narrow down the opportunities, take fewer trades, and pull a profit out of our bottoms using the robot. Now, one of the other filters that we're using, and we might come back to this tomorrow, and we might not, but we will come back to testing this robot tomorrow and continuing this process. One of the other filters that we see here is the ADX, which measures the strength of a trend. And there has been some conversation recently that we wouldn't get into this trade at all if the ADX was above a certain set level. Because if it's above a certain set level, the trend is still strong in that direction that it was going, and we don't want to get in the way of that. So that's an opportunity or an idea that we've had recently, and we'll continue to explore that. And when we come back tomorrow, we're going to continue testing the British pound New Zealand dollar. We're going to look at another couple examples. We're going to use a second hypothesis and a second filter to try to extract profit from this trade. So we're looking forward to spending that time with you. Thanks so much for being here in the morning. Don't forget, you can find the recordings on YouTube. If you're already on YouTube watching it or on Facebook, we'd love you to leave a like on the page or subscribe to the channel. That helps us out. Thanks so much for being here, everybody. Wes, if they want to get more information about the robots, they just go to robbooker.com
Yep.
and they click on the robots at the top of the page. Thanks, everyone. We'll see you tomorrow. Bye for now.
Bye for now.